Good morning, everyone. My name is Brad Matheny. Today is the 20th of June, and we are going over a recent analysis that I had done actually over the past roughly 3 months or so. I started highlighting how I believe the emerging market and undervalued, ignored sectors in the US market were going to start trending higher. And what I'm trying to do here is show you again where to see opportunities. So understand we've got all of this data. This is a weekly chart on the emerging market sector index. And what we're going to do is we're going to take a look at price rejection points, and we are going to map out some of these recent highs and lows here for price rejection points. And what we're really looking for at this point, folks, is to determine where we're going to have that deep 618 correction on these upward moves. So remember, this is a very deep correction here, and that looks like COVID. Yep, that was COVID. And then we had again a deep 618 correction breaking through right here. And we've just now gotten above it. You can see this has acted as fairly strong resistance moving through this level. So the 618 is important on a pullback level because, normally we'll get 618, maybe a little deeper, and then we'll see a recovery. So here we had a fairly strong pullback below the 618 level right here, down here to approximately a 95% pullback, and then we recovered into a sideways channel. You can see the way I've drawn this. Let me get rid of this line. We've moved into fairly solid flagging. So if we look at this over here, you can see that we moved into fairly solid flagging. We had this upper level, make this a little darker. We just broke through that a couple of weeks ago. And I believe that what we're going to see is a fairly strong, through this rejection point, a fairly strong rally phase setting up through the end of this year into 2024 that could, or 2025, that could move us into a very solid upward trending. So let me grab this and give you an example. If we get a moderate trend back up to this 382 level, you're talking about a 12% rally in the emerging markets and maybe up to a 20% rally moving forward. So again, I'm going to urge you to pay attention to this research and understand that emerging markets are likely to see a very solid rally between now and the end of 2025. Looks like we've got very solid support. Looks like we're getting a breakaway, and this is going to carry over into undervalued, like the ARKQ. So take a look here at ARKQ. Looks like I've got some lines on here, so let me remove the drawing. And again, let's go from price rejection to price rejection, roughly here. There's our deep 618 pullback. You can see that it acted as resistance. You can see again that we've got this resistance channel coming across here. You can see that we've got this flagging channel coming across these lower areas. We've got almost a beautiful 1, 2, 3, 4, 5 moves setting up, potentially up into these areas. And that gives us a really solid move up 16, 30, maybe 50% or more in this particular sector, technology and robotics. Now, let's take a look at ARKK, Innovation ETF. Okay, here's something I drew, looks like just last week. We've got the same type of upward flagging formation. So again, same type of creation of a flag set up here. We've got this lower flag setting up here off of this rejection low, across this rejection low. It's actually more of a channel, it looks like. And you can see we're moving down. We go from this area. This was a complete pullback. I mean, really, I can look for the 618 off these rejection points, which is up in this area here. But in reality, this was a very serious pullback. This came all the way down into this, below this lower rejection point. Really, this is almost a double bottoming setup, triple bottoming over here, which is why we have a lot of explosive move to the upside. I mean, this moving back up to the 618 level would be an 87% rally. Moving up to the 382 level would be 150% rally. That's a big move, guys. And I believe these markets are just setting up perfectly for this type of a rally. Now, I want to show you something that I did with my members. So my basically what I do is I deliver services for traders. I try to keep them abreast of what's going on. One of the things that I did just this weekend, which is up on my YouTube channel, is I went through my SPY cycle patterns and I drew back here on the daily what I suspected would be price pattern formation going forward over the next couple of weeks. And you can see here, this was actually yesterday. We missed a day with the holiday. I didn't realize when I did this video the holiday was setting up. So we're moving into this sideways channel. Everything is shifted one day back. So we're now in this pullback. I think we're going to see consolidation in this range, maybe over the next 4, 5, 6 days, and then get maybe a bounce off of this yellow, dotted yellow line and start to rally here near the end of June and into early July. So this gives you an opportunity here to really time your trades over the next, 5, 6, 7, 8 days to try to pick up some of these lower lows that may occur in the market. But I also started to provide these, let me come over here and here, started to provide these what are called undervalued lists. And these are actually looking quite interesting. Now, what we're looking for here really is anything in a 3 or higher on the long side. We don't have much here. We got one trigger here on GoDaddy. So GDDY and GoDaddy. Oops. You can see on a daily basis is very strong to the upside. I'm going to go to weekly so we can see what's going on. And we more than likely had some previous triggers over here, but we just got a brand new trigger right over here 1 week ago off of this. We're looking for this level to hold, and we could see, again, GoDaddy has had really strong growth. We're up in $110, $130 area. We could see a fairly strong rally phase of GoDaddy into next year up in the 160, 170 area, maybe a bit higher. Now we come back over here and we take a look at some of the other triggers. We have a new trigger here, long on PRU. Now remember, PRU is in downward trending, so this is going to be something we have to kind of check out. And from this standpoint, I could just use price rejection here to understand where we're at. Clone, drag this off of this high, clone again, and try to find the midpoint area. So I'm going to pick right around here. And that gives me an idea that if I really was looking to buy this little bounce right here that occurred off PRU, this little bounce last week was a beautiful bounce off of midterm support within this channel. We're likely going to see this continue to move higher back to the upside. So I'm giving you some hints here that, accumulation is starting to take place in these sectors. And I think we're going to see some real opportunity to the upside. So understand this, the real opportunity here would be into maybe the 137, 138 area, maybe on an upside move. That would be a nice solid upward opportunity of about 18%. Same thing back here. Let's take a look at the next list. Now remember, these negative threes, these are all bearish ranking. They're climbing a bit higher. Like PRU came down last week. Sometimes these are good opportunities. It's a new trigger. It's off 5%. So what is your risk on this? Is about 5% for the money you allocate. I recommend traders take their trading capital and break it into 10 or 12 what I call trading accounts or setups. And then that means that this is really right now a 0.5% risk on the capital you allocated. So hypothetically, you had 100 grand, break it into 10 segments. That gives you 10 grand each. So if you had put $10,000 into this stock to try to trade it, on this particular trade, based on your total assets of 100 grand, you would be off 0.5% right now. Remember, you have your stop system, you have your entry system, you have your two targets, and you can see this is the numbers of how these other triggers have performed. And the way this algo works is that profitable trades will stick. They will hold for 2, 3, 4, 5 weeks or longer. Losing trades will typically get out, or what I call slip. So the saying I have for members is profits stick, losers slip. And again, it's a matter of catching good trades that are up 16, 18, 12, 23%. So we're looking for anything typically that's up in this 3, 4, 5 area and trending higher. When you get into these negative trends here, remember, these are downward trending, and this is a type of a pattern, this purple. Same thing with these dark red triggers here, which is explained internally. This is showing you that these are exhibiting a breakdown, a weakness breakdown. This is called a 33 thrust. This is called a pop shift. You can see we had pop shift triggers right over here in most of these stocks last week. And again, that's because we're moving through a consolidation phase. Remember, when I came back over here and highlighted my expectations for the SPY, I had drawn that we were going to be looking for consolidation over the next few weeks, right? So remember these lines that I drew? We're looking at consolidation into this yellow channel before we start to break out into Q2 earnings. So this means over the next couple of weeks, if you're following my research, you would be looking to try to take advantage of pullbacks in the market, which we are seeing right here. These are pullbacks in the market. When we have a long trigger that's in a pullback that's sufficiently away from our stop, we have the opportunity to maybe get into some of these trades, like this one that's only 5 weeks old, this one that's only 2 weeks old. Now let's look at the next one. There are 3 pages of these. So here we have some 6s, 5s, 3, 3, 3, 2, 1. We got a new trigger here in ABM. Let's come take a look at ABM. Weekly chart looks very solid. You can see here we've had quite a bit of movement to the upside. Let's scroll this sucker out. All right, well, we're getting some moderate volume. We are looking at a fairly solid consolidation range here. You can see that we've stayed within this channeling range across this rejection point, and we have the same type of rejection point here. We've just now gotten above it, so we've got a very nice breakout taking place to the upside, and it is generating a buy signal right here. So this is ABM's got a brand new buy signal. Entry price at $50.14. We're off 2% right now, which again would be 0.2% overall with regards to your risk in the trade. And we have another new trade here in IMMR. Another decent breakout range. Really, I got to kind of stick with this high across this rejection point. And then see if I can map out the lower rejection point here. Good solid breakout range. Remember, this trigger was what, 5 weeks old? Let me check real quick. IMMR was 3 weeks old. So we're into the 4th week right now. We've already hit our first target, entry price of $9.40. Current price at $10.63, and again, these are the undervalued and ignored stocks and sectors. So I expect this list to continue to get stronger and stronger, and this is a great resource for traders. You know, we've got this one down here, Axis Capital Holdings. Let me come in here, AXS. Again, nice trending. This is a weekly chart. Good solid, it looks like good solid breakout. I'm going to stick with this rejection point across here, come across these lows. And again, I teach a lot of this, setup. So you can see we actually have beautiful rejection here. We bounced off of this rejection point again. Very solid, very, very solid. I can actually move this down a little bit. The bounce off of this rejection point right over here is very important, indicating that we're looking like we're going to hold. So we need to see price hold above this level and try to stay above this trend moving higher. Buying down in this level would be great in this lower area, but it does look like we're going to see some nice breakout move here. And again, I mentioned to you, this is kind of what I expect to see happen over the next 12, 15 months, as these undervalued and ignored sectors are really going to start to perform. Maybe 30, 40, 50% over the next 12, 15 months. So now let's take a look at another newer trigger. Here we have one. We looked at IMMR. Let's go to TKC. Turkcell. So this must be Turkish. TKC. Big breakout. Wonderful big breakout. I mean, very hard to ignore this. Let's see if we can draw the channels. And of course, I'm off of rejection, so I'm already looking at rejection. What is rejection? It's technically where price continues to trend. So let me show you a little bit about rejection. So rejection down here is where we see this reversal. Rejection here is a little, I marked this a little higher than these lows. I'm not looking at lows so much as where price shows rejection. So you can see how it got below here, rejected back up. Came back down, rejected off of this with fairly strong volume to the upside. So what I'm really doing, same thing here. Price came up, rejected, stalled. Came up, rejected, stalled. Came up, rejected. Came up, rejected. Came up, rejected, stalled. So I'm looking at rejection points, not highs and lows. Now we've had a very solid breakout. You can see this upward trend, really clean, really, you know, quite substantial. And we come back and look at the data going all the way back to 2014-15. Do I think we're going to get way up here to $16, $17, $18? No, probably not. I think you're probably looking at getting closer to this rejection point here, which represents a roughly 40% move to the upside. So again, you're looking at a longer term holding. This is what I call weekly swing trading, and it's actually very solid for you to be able to do this. So again, great setup. So now let's come back over to the last page, because we're not going to go through all of them. We're just going to take a look. So here we have a 7, 5, 4, and then some 2s. We've got 2 new triggers here that are shorts, Investian and NFE, New Fortress Energy. Energy has been weak. Got a couple of newer triggers here. Let's take a look at this one, which is REVG. Wow, nice breakout. Very solid. We've probably been in and out of this for the past couple of weeks. You can see, again, we've got a breakdown across price here. Using these highs and lows, I have to determine where the rejection points are. So I'm going to pretty much run off of that level, and match it to this close, because we consolidated down off of here. That gives me a lower panel down in this area. Notice we're getting these volatile highs and lows, so that can happen. We got a very clean breakout here. And now we start our new upward channel. So we look for rejection, come across rejection here, rejection here, rejection here, rejection here. So pretty much right there's our upward channel. And we are going to now not try to go way up here, because even though that is high price rejection right up here, we're going to try to look back in this area and try to find consolidated rejection. And then we'll put another one up here off of this upper price rejection and call this a high channel. Now this is our high channel. We could see this continue to trade within this range. So in theory, folks, you know, price may attempt to revert back down into this channel before attempting to rally a bit higher. You've got to watch these high spikes. When you get these bigger spikes, you're going to see more volatility. We could see a big breakout here. We could see a pullback. You want to watch this over the next week or two, because we might see this pull back a little bit. Ultimately, trying to buy down in this area would be more advantageous than chasing this trade right here. So I would recommend maybe considering what I call an anchor position. An anchor position is a small amount of money. This is a $27 stock, $26.50 roughly. You know, if you had $10,000, you know, maybe you start off with 23 or 2,000 or 2,500, get in this area, and then set some sort of a buy stop area right down in this area. Sorry, that would be a buy limit, and then maybe a buy stop area up in this area, giving you the ability to catch a lower price or catch a breakaway, moving to the upside. But it looks very solid, easy upward trend, new highs. This looks like a very good trigger overall. Okay, let's get to the next one. No, not Intersys. SLRC, SLR Investment Corp. Okay, now use your judgment here, guys. How does this look? You can see here we've had quite a bit of, this was the COVID breakdown. We're kind of in the middle of this channel. Let's go from this rejection point to here. We're at the 618 area. This is good. Obviously, this is a very solid pullback. We do have some downward channeling risk here, and I'm going to explain it to you by moving across the rejection points here, and then I'm going to show you moving across the rejection points here. We can come all the way out here, indicating that we have a high price channel range that could provide some resistance. We then have a rejection point here across here. So I'm going to mark this as a concern. I'll make this a darker red color. And ultimately, if we were to copy this channel, move this up into these rejection points. So there's our upward channel. Here's the concern high that we have from these previous rejection points. And here's the concerning high price downward sloping channel that will ultimately act as resistance. You can see here that we have this, whoops. You can see here that we have this area kind of aligning right over here as a confluence area where the upward purple channel crosses the major resistance channel. So there's a pretty good opportunity. We're down here near the lows of this channel right now. That's a pretty good opportunity for a buy down in this area. We would want to see a stop level maybe down in this 1525, 1530 area. I'll change that color. And we would probably, you know, obviously like to see it get above this middle channel here, and then attempt to rally up into this area where it's going to find resistance. That move, I'm clicking on things, hold on. That move is going to be a 13% move, potentially breaking upward. And again, when we look at upward channel, And where it could go, we're going to be picking these rejection points running right across here, and that gives us a 21 to 21 to call it 25% rally phase. So you're getting some really great triggers here. Let's go take a look at the list again. Here's a new one, NV Natural Groceries by Vita College, $19 stock. Here's a long gold. Let's take a look at this, GGN. Everybody loves gold, right? Okay, $2 stock. Don't really have any volume. You can see gold stocks have been under pressure recently. Yeah, I mean, what do I see here? I see a very undervalued stock, an income trust. Now, do I see any real upward trending? No, kind of hard to see much of any upward trending. Let's come across here and here and extend it. Okay, and then let's come across here and here. Remember, I'm looking for price rejection. Okay, got a nice little breakout there. Let's come across these lows. Now, why won't I pick this deep low as rejection? Because this is likely COVID washout selling. I'm going to pick the rejection area somewhere up over here, move it across these lows. You can see how it lined up very cleanly moving through here. You can see right out here, I have my apexing pattern here, and I have my apexing pattern right out here. Trying to do this as clean as I can for you. So we have an apex here. We have a flagging formation, very clean, A, B, and then we get a little bit of a C, D, E move to the upside, should continue to move higher. Where would we want our stop? Where would we want to, how would we want to trade this? Okay, I'm not telling you, oops, what to do. I am telling you how I would look at it. So you notice that we have this breakout. We have a little gap move here between the close and the open. This little gap move is important. You do want to watch for these types of moves. Okay, so ideally, ladies and gentlemen, we would not want to have our stop below the gap right now. So we would want to have our stop down in this area. We do have a move from this apexing area. Now, I always like to pay attention to the price apex, which is right about here, actually a little higher, right about there. That is our apex. So why is that apex so important? Because price could come back and try to retest that area. So ultimately, let's take a look at this new channel. We don't have anything except this move here today off of this last low here. So we come up off of here. We can presume a channel like this. We can potentially drag this off of rejection right here and assume that we have this upward trend taking place. We would possibly want to try to buy in this 398 or lower area. That would kind of be our buy area. Our stop level would be down at 383, let's call it 384, maybe 385, and we would be looking for price to rally back into this channel and upward. Now, where could we potentially see this go? Let's take a look at historically. We do have this rejection point here. Okay, gonna make it hard for me, right? So we have a rejection point here. These ultimate highs, we're just off of that level right now. That's our recent high back over here. We then have a rejection point back up here, which is where I drew my arrow, interestingly enough. And again, we have a series of rejection points here, really a solid one right over here, pretty much right across this area. So where are we at with this move? We could see a move from this area here up either 4%, 13, 14%, or 41% potentially to the upside. Very low cost stock, $3, $4. Really potentially looking at seeing some upward growth. Of course, you know, we passed the apex here, and this major apex level is where we want to be very cautious. We do not want to see price get back below this apex level at 374. If it gets below this apex level, then we could see downward activity, and we do not want to risk trying to be anywhere near a breakdown in this market. As long as this upward trend holds and this upward channel holds, which you can see how I've drawn it, this blue channel right here, as long as this holds, I mean, we could see this move out a little bit and setting up some sort of a base, kind of like this, moving higher, that would be okay. We just need to see this gap area avoided. Price has to stay above that gap area in order for us to see upward movement. We got a pretty good actual trigger here. You know, it's weaker. It's in an early stage breakout. I mean, it's really after this deep low back here in COVID, we've consolidated into a flagging formation. We've stayed above the 50%, the 382 level. We're now rallying, trying to get above this level. I mean, I see this really trying to make a move up into the $5, $6, $7 area over the next 12 plus months. So, you know, that's a decent move if you know what you're doing. And remember, you can't just set these and forget about them. You got to be paying attention to them over here, which is why you want to check out my MENT.com expert growth setup over here and gain access to these undervalued lists. Within the MENT.com expert growth area, you have multiple hot lists. You have your daily movers, your weekly movers, weekly hot list, weekly movers hot list, and then of course the weekly undervalued list, as well as the live trades and the weekly stock picks. So you have quite a bit of data over here for you to check out and actually execute your own trades. And remember, it's available at MENT.com for you to be able to get in here and pay attention to this. Not counting all the other data in here. All of my weekly updates, my videos, you know, my custom indexes. So you have a ton of resource and information here with regards to data, his trading systems, real estate analysis, and then here come my custom indexes telling you what to expect. I put a lot of effort. I put basically 15 hours every weekend into providing you very clear, actionable data. And on top of all of that, I also run a Discord channel for members where you can come in, ask questions, and gain information, talk to me directly. And lastly, folks, look over here. If you're new to training or trading or you're struggling, look at all of this. Where is it? Back over here. Training videos. Look at all of these videos to help you learn to become a better trader. Literally dozens of videos I've gone through and taught you the mechanics of trading, which is how to use price as a viable early warning system, which I'm kind of showing you on these charts. And it's just a matter of managing your money, managing your risk, and executing. So come join me. It's very inexpensive. If you want to come in and join, I have in fact, let me come here to show you that I've got very inexpensive startups, 60-day growth, expert growth trials, $34.99. That's 2 months, or a 6-month trial is $120, and that's a discount. These are really substantial discounts. It normally costs around $48 a month to get all of this information, and it's well worth it. I mean, I've shown you 2 dozen or about a dozen trade setups. So you can imagine between all the hot lists and the algos and my research and my videos, my custom indexes, and the what I'd call the TT scanner hot list, which is what we were looking at. This is a TT scanner hot list. What I want you to understand is all of that is available for $48 a month, basically about $1.20 a day. And it gives you the ability to stay ahead of the markets, learn how to trade more effectively, and really hand pick from, you know, a dozen or 2 dozen plus trading signals every week for you. Okay? Very simple, very easy, and waiting for you to come check it out. Thanks again, guys. Talk to you later.